884,700, and then we also record it here. It is the total liabilities that are given, 884,700. Okay, so we now have got, or we now already have got our current liabilities. Okay, fine. So we are still going to continue now with 2.2.2, the balance sheet. Okay, let's find out the information that we are given. What is it that we are given? If you look at A, there are many question marks. So we are going to start by identifying those amounts which are already there that we can actually maybe start by recording. Okay, since we are given the current liabilities here for at 884,700, and if you go to G, we have been given some financial indicators that you can use to get some of the amounts. Okay, we have the current ratio, the asset test ratio, the debt equity ratio. The current ratio, we can use it to find our trade, our current assets, Why? Because the current ratio, the formula for the current ratio is current assets as to current liabilities. So if they are saying that it is assets are 1,5 is to 1, how much then are the current assets? So this 884,700 is indicating 1, as to the current assets are 1,5. So how do we get the current assets? We are simply going to say 884,000 multiplied by 1,5 to get the current assets. So let's do that. 884,700. Okay, let me just do it here. 884,700 multiplied by 1,5. It will give us the amount for the current assets. Okay, let me go back to my calculator. Okay, the current assets now are 1,327,000. 1,327,000. I'll go to my answer book. Current assets 1,327,000 and 50. How did I get that? I said current liabilities multiplied by 1.5. Okay, which gave me 1,327,050. Okay, what did we use? We used the financial indicator that is given there. The current assets are 1,327,050 as to 884,700. Okay, what else can we find? From the information that we are given, we can see that there is D. Trade and other receivables occupied 54% of the current assets. So since we've got the current assets, we can calculate the trade and other receivables. So I'm going to write here, okay, trade and other receivables. Trade and other receivables. Okay, my trade and other receivables, I'm going to take the current assets. So I'm going to say current assets multiplied by 54%. So my current asset is 1,327,050 times 54%. Let me find out on my calculator how much is it that I'm going to get. I'm going to get something like 716,607. 716,607 are my trade and other receivables. So because we've got the trade and other receivables already, we can actually find, remember here, under current assets, we have got inventories, trade and other receivables, and then the last thing is cash and cash equivalents. Okay, so we can get the cash and cash equivalents using the asset test ratio. Okay, the asset test ratio is given at 0.9 is to 1. What does the formula actually say for the asset test? It is current assets minus inventories as to the liabilities. So we are already the current liabilities, sorry. So the current liabilities are already given that, okay, fine, they are 1. And then here they are saying that current assets minus inventory is 0.9. Current assets minus inventory is 0.9. So we can safely find current assets minus inventory. We can come to the, so if we are saying current assets minus inventories. We are going to remain with trade and other receivables and cash equivalents. Okay, so let's find out how much is that amount, and then we'll safely be able to find the amount for the cash and the cash equivalents. Okay, so we are going to say it's 0.9 of the current liabilities. How much are the current liabilities? 884,700. So I'm going to write it here on the answer book to say current liabilities multiplied by 0.9. Okay, the answer that I get, I'm going to say minus the trade and other receivables, 716,607. It will give me the cash and cash equivalents. I hope you have understood that one. Okay, so 0.9 times 884,700 minus let's calculate together and find out exactly how much are we going to get after making that calculation. The cash and cash equivalents, we are going to get something like 79,623. 79,623. 79,623. So the moment we have got these two figures, it is now even easy for us to find the inventories. It becomes the missing figure. We simply have to say the current assets minus the trade and other receivables minus the cash and cash equivalents. If you do that, we are going to find out that our inventories were 530,820. 530,820. Okay, so far we are getting there. There is now some flesh on our statement of financial position. We have now managed to find all the current assets. Okay, now that we have got the current assets, I'm sure we can also be able to work out something again on the asset that are there. So here under non-current assets, remember the first assets that we record are the fixed assets. We have got fixed assets here. Fixed assets. And we also have got financial asset, which is the fixed deposit. Financial assets. Okay, we have got a fixed deposit. Let's see what they are saying on the information that we have. Okay, the fixed assets, remember we don't have anything, but the fixed deposit is given. How much is it? It's 200,000. So we can safely record on the answer book, the fixed assets, the financial assets are 200,000. Okay, 200,000. Okay, fine. What else? Okay, let's look at the ratio that we are given and find out what else can we calculate. Okay, current ratio, we've used it, the asset test. The debt equity ratio. Okay, the debt equity ratio, we can use it to find the equity, the shareholders equity that we do not have here. Okay, fine. So if they are saying that the debt equity ratio, it simply means debt as to shareholders equity. Okay, and then the debt that is given there, it is the loan, is it? The loan. Okay, but we have got to find the loan at the end, because they are saying that all these things, the adjustments had already been done and everything. So we need to find out how much was the balance of the loan at the end of the financial year. Okay, let's do that calculation to find out how much is the loan at the end, the balance of the loan at the end. Okay, let's do the calculation together. Okay, we can actually go straight to where it's written non-current liabilities, and then we record loan. We do that adjustment here, loan. Okay, let's look at what we are given. We are given the balance at the beginning, the 920,000. So we're going to say 920,000. 920,000. What happened? Okay, we are going to say plus 65,400. Why? Because the interest is being capitalized. Plus 65,400, the interest being capitalized. And then we minus the repayment plus interest. The repayment, okay, that was made 153,600. 153,600. And we also minus the current portion of the loan, which we calculated under current liabilities. Under current portion of the loan, we said is 88,200. 88,200. This will actually give us the amount of the loan at the end. After working with our calculators, we'll remain with 743,600. 743,600. That is now the loan that we are having. So when we are looking at our debt equity ratio, we are saying that our debt is 743,600. Okay, so as to the shareholders equity. And then if we look at the debt equity ratio that they have given us, they are saying that 743,600 is actually equivalent to 0.65, and the shareholders equity is 1. So in order for us to get the 1, it's very simple. We are simply going to take, I'm going to show it on the answer book, the 743,600. We simply divide it by 0.65. Let's do that, and then you find out that we are going to get something like 1,144,000. 1,144,000. Okay, so now that we have got the shareholders equity, it's easy for us to be able to find the ordinary share capital. We are going to calculate the ordinary share capital. The ordinary share capital, okay, we open our bracket here. It's simply going to be 1,144,000 minus the retained income, which is already given, 288,000. It is going to give us our ordinary share capital. Let me go back to my calculator. It's going to give us something like 864,000. 864,000. Okay. And it seems as if under equity and liabilities, we have got everything that we want. So we can actually safely calculate the total equity and liabilities. Total equity and liabilities. Okay. We have got the total for the current liabilities, 884,700, plus the non-current liability is 743,600, plus the equity, the shareholders equity is 1,144,000, of which it will give us a total of 2,772,300. Okay, this is a balance sheet. Automatically, we already know that our total assets are supposed to be equal to the total equity and liabilities. So here we are also going to have 2,772,300. Okay, so we have got the total equity and liabilities. We have got the total assets. What is it that is still missing as per our question? We still have got the amount for the non-current asset, which is still missing, so that, and also the amount for the fixed asset, which is still missing, so that our balance sheet can actually come to a completion. Okay, all right. In order for us to get the fixed assets or the non-current assets, since we've got the total assets, if we say total assets minus the current assets, we'll get the amount for the the non-current asset. So in other words, I'm saying that here we can say total assets minus current assets. It can give us what we want. So the total asset here is 2,272,300 minus the current asset 1,327,050. Let's calculate that one. We'll remain with something like okay, let me show the amounts anyway so that it might not be confusing. I says 2,772,300 minus 1,000,000. It's 1,327,350. Sorry, the amount is a little bit smaller, but remember I said it's total assets minus the total for the current assets. Okay, so we are going to remain with something like 1,445,250. 1,445,250. That is the amount for the non-current asset. So if we've got the total for the non-current assets, it means we can be able to find the fixed assets. Remember, here we only have got 200,000 for the financial asset. So here we can safely say the non-current asset, which is 1,445,250 minus the 200 that is given there, the 200 for the financial asset, it will give us something like 1,245,250. 1,245,250. Okay, it seems as if everything is now there on our balance sheet. But I hope you have actually managed to see all the steps that I've taken. It's simply a matter of you using what is given, what is required, so that you can actually be able to get the amounts that you want. Remember, on this answer sheet, we're only given the money for the retained income. All these other amounts were not there. These are ratios or financial indicators, were very much helpful to help us to calculate all the other amounts. So anyway, you can find time to do this question again. If you see that you still have got any questions in understanding some of the calculations that I have done, do not forget to go to the comment section and write something. I'll respond to you. And also do not forget to like this video and to subscribe to this channel. Thank you.